Welcome back to the Digital Asset Report. Bitcoin is hovering around 67,000 today, with traders recalibrating rate expectations after the latest U.S. jobs data cooled hopes for near-term cuts. ETH is holding under the 2,000 level, and the tones across majors still feel defensive as markets wait for the next inflation print and clearer liquidity signs. Meanwhile, precious metals, commodities, U.S. equities are all in red, signaling a broader macro headwind. In Washington, SEC Chair Paul Atkins used a House oversight hearing to lay out a clearer crypto posture on being tougher on fraud and lighter on what he criticized as policy built through lawsuits. Atkins endorsed the Clarity Act as the long-term fix for jurisdiction in the crypto space, calling for tighter coordination between the SEC and the CFTC. Take a listen.
The president has set out the challenge that the U.S. should be the crypto capital of the world. And I feel strongly that we can and should do that and achieve it. So to do that, we have to have a framework that makes sense, that is fit for purpose. Unfortunately, traditional rules that the SEC has are not really fit for purpose here and has created a lot of uncertainty in the marketplace. Thus, the Clarity Act, and thus the true importance of the SEC to work very much hand in glove with the CFTC in order that there be no gaps in the oversight, but that also innovators have surety as to what they're doing, and they're not going to get a gotcha situation like has happened in the past with some of the enforcement actions that the SEC has brought in that area. So we want to make sure that people know the rules of the road and can abide by it, and that those will foster innovation here in the United States.
As regulators chart out clearer definitions and consistent disclosure standards, the risk of compliance drops. That is what institutional platforms want to see before they expand listing, custody, and prime services. The hearing also sharpened the political fight around enforcement pullbacks, which is likely to keep crypto policy in the headlines till spring. In Hong Kong, stablecoin distribution moved from theory to a formal product pitch. President Trump's World Liberty Financial said it plans to roll out WorldSwap, a foreign exchange and remittance platform built around its USD1 stablecoin. WorldSwap targets cheaper cross-border settlement that connects directly into debit cards and bank accounts. The firm also highlighted early lending activity tied to USD1 as scrutiny grows around potential conflicts given the Trump family's ties to the venture. Elsewhere in Asia, OSL announced its official launch of USD positioning it as a regulated enterprise-focused dollar stablecoin for settlement and corporate payments. In a separate move, OSL also disclosed a partnership that brings digital asset trading into the SoFi Hong Kong app, another example of regulated wrappers pulling crypto exposure into familiar consumer interfaces. An interesting tech launch this week came from Lightning Labs. The company open-sourced a new toolkit called Lightning Agent Tools, designed to let AI agents transact with each other natively over the Bitcoin Lightning Network. The protocol introduces the means for AI agents to interact with payment-gated APIs and content automatically and without signups, API keys, or identity verification. This lands as OpenClaw and Moltbook push autonomous AI agents into mainstream workflows. The missing piece has been machine-native micropayments for data, compute, and services. And as Lynn Alden said at the Bitcoin Investor Week event this week in New York, Bitcoin may still be a risk asset today, but it is growing into the main protocol for digital money. Take a listen.
As long as it's still a growth asset, I think it's going to be treated as a risk-on asset. Now, from a functional standpoint, because you can self-custody it and because you can move it around, it can give its direct holders some risk-off properties in a similar way that gold can if they put it in their basement or bury it in their backyard. So it has that functional risk-off, but price-wise, and the way people treat it in portfolios, the price action, I think it's going to be risk-on for the kind of the foreseeable future. Lately, it's been very correlated with software stocks, which have sold off. In general, this cycle didn't have a lot of retail demand for Bitcoin. Most of the demand was corporate buying, as well as maybe moderately higher net worth people that have a brokerage account that were buying the new ETFs. That's where almost all of the demand came for this cycle. We didn't really see sovereign buying for the most part, and we didn't really see a big influx of retail like in prior cycles. And so I think the use case longer term is that it's the main protocol for digital money. It's got the network effect, it's got the security, but it's a matter of it takes time to grow and get large.
South Korea's BitHum is still cleaning up a high-profile internal controls failure that credited customers with massive Bitcoin balances. Reporting this week says the exchange clawed back the vast majority quickly, but regulators opened investigations and lawmakers called emergency hearings, a reminder that operational risk inside centralized venues can turn into a systemic confidence hit even without an external hack. The theme across the industry right now is infrastructure under pressure. Policymakers on Capitol Hill are sketching out jurisdictional lines. Stablecoins are competing to become the default cross-border dollar rail, and now AI agents are being handed a payment stack built for machine-to-machine commerce. The next phase of crypto is the race to make the web payable, programmable, and compliant. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more.